everybody, it's time for this week's Mortgage Minute with our dear friend Tatiana Ivleva-Lopez.
Hello, Miss Lopez.
I've added a letter to your last name. From Prosperity Home Mortgage. How are you?
I'm good, guys. How are you?
Good.
Doing good. Getting ready for Thanksgiving.
Yeah, and it just snowed a little bit. That's awesome.
I know. I love it.
Yep.
I love it. So how are you feeling? Are you feeling particularly naughty or nice, or are you just focused on the holidays?
And it's that time of year to start bringing out the Santa hats again. So we need to start seeing those after this meeting.
Yes.
Yeah, I need to take it out from my closet. Yeah, no hats today. It's pretty flat. Nothing really happened. You know, the rates, they do fluctuate on daily basis, and maybe not necessarily the rate itself changes up or down, but maybe the pricing for the rate could change, meaning that, you know, every rate has a price, right? That's why sometimes you get a quote for, you know, for X rate 6.99, right? 7% rate, and you don't have to pay any additional charge for this rate. But if you want to have a lower rate, let's say 6.75, you would need to pay a charge for it called discount point. So that's what, because the price for that rate is lower than what we need to have. So sometimes, you know, the rate could stay the same. Let's say it's 7%, but yesterday with that rate, I would have to charge a small discount point for it. And day before, maybe actually there was no discount point. So the rates do fluctuate on a daily basis, but, you know, in general, it's pretty flat. I think last week we had it 6.98. So it's now 6.99. And just as a disclaimer here, this is you know, rates based on 780 credit score and at least 40% down payment. So it fluctuates, and, you know, it's average rate. So if you put in less money down or your credit score is lower, that could affect the interest rate. That's why this is the average rate. Yeah, so FHA, the government loans, as always, 6.56, as always lower than conventional. As of right now, jumbo is just a hair better than conventional. So we'll see what happens. They expect the rates to go down to high fives sometimes next year. We'll see what happens. They also expect them to go a little bit down by the end of the year. We'll believe it when we see it, right?
Exactly.
Are you seeing any refinance applications come in? And the reason I asked that, I know the rates are still around that 7 mark, but we just had some clients reach out yesterday for us to help them do a valuation for a property because they want to knock it down from 8.25. So we're starting to see clients to look into the refinance world. Are you seeing that as well?
Yeah, there's some refinance activity going on, very low comparing to a few years ago, and then even comparing to a month ago, because remember, or month and a half now, when Fed was going to cut the rate the very first time, the mortgage rates reacted in anticipation to it. Actually, it was earlier reaction, and the rates dropped. They were in about the whole percentage point lower than what they are right now. So there were definitely more refinance activities, especially on government loans like FHA or VA, because rates are better, and it makes more sense for those clients to refinance, especially, you know, on FHA there is, and on VA there is a streamlined refinance process available, makes it cheaper, makes it easier. They don't need to do appraisal, no credit qualifying, so it's just easier type of refinance. So more activities there, but right now mostly people, you know, they refinance if they have to. Let's say divorce situation and one needs to take another person out or buy them out with
Yeah.
cash out refinance. So mostly that.
Okay.
How are you seeing the loan applications? Because I know we just had some information come in saying that in Virginia, now that's as the whole state, but Virginia, the listings that we do have, which we don't have a whole lot, but they're sitting on the market a little longer. I think it was like a little over 20 days, like more than half were sitting on about a little, like 22 days, I think. How are your applications?
So the applications themselves, they're down right now, and they change, they fluctuate from week to week. 1 week is nothing, another week is very busy, just with initial applications. But I'm busy with clients that already had applications done a few weeks ago, and now they're looking for properties. And inventory is low. I was just talking to one client today, and she said that, saying that inventory gets them depressed right now because they can't find something that they like. But
yeah, inventory is really low right now. That is a big challenge, which is a great opportunity for sellers. But we're into the holidays, a lot of sellers don't want to move during the holidays, so it's kind of a hit or miss on that. So, but if any seller can do it, man, now is the time. Because there are buyers sitting there waiting.
Well, and I think a lot of people's problem is their frame of mind. If they think that they want to, seriously, if they think they're wanting to find like the perfect home or their forever home, that's the problem. It's like you still have to live somewhere while you wait. It's what are you gonna do? You can't pause. Like you can. Like, I don't need a new KitchenAid mixer right now. I can put it off till the next holiday and make this one work, right? But for a place to live, it doesn't have to be perfect. Sometimes it just needs to be, okay, let's live here in the right school district, or let's live here, it's close to work, and know that it's like for a year or something, especially with here in our area, we are still having appreciation. It's still not a bad move to move into something that just works, even though it's not ideal.
As an example of the appreciation that those clients that I just mentioned, they bought about a year ago, and they've already seen about $45,000 appreciation just because of what's happened here in this market. So if they had waited, because they bought at 8.25%, if they had waited until the rates came down to here, they would have lost $45,000. So if they're waiting for the perfect opportunity or for the perfect property, they're missing out on that appreciation.
But now they can potentially refinance to maybe 6.5%, and still have saved that, what, 45?
Yeah.
What a great idea! Everybody should do this. Okay, let's time to get back on track.
All right. Okay, so let's talk appraisals. Let's talk everything about appraisals, and let's talk about a very specific situation that came up this week regarding appraisals. So,
because assumptions are big, right? You're talking about the assumption, VA assumptions. X that out.
No, we're talking about the
oh, right. I was thinking of Alex.
So before we dive into to the situation that we came up with, which is going to tie into a video we shot a few weeks ago regarding when are you committed to your lender and the timeframes to get better.
Right.
Before we dive into that, will you just run through real quick what the appraisal is and why it's necessary?
Appraisal is professional opinion of the value of the property, right? So why do we as lender need to have appraisal done in most cases? Because we will lend X percentage of the loan based on sales price or appraised value, whichever is lower, right? So for example, just to have a nice round, easy numbers, the property price is $1 million and the buyer is putting 10% down. So they borrowing $900,000, right? So we're giving them then a 90% loan, and each loan bracket has its terms, right? So it's 10% down payment. this is your term, this is your rate, you might have a mortgage insurance of X amount. So now we want to make sure that the property actually worth $1 million. And that's why we're doing that appraisal. So if appraisal comes in at higher price than 1 million, we're still gonna use 1 million as the point of calculations, right? It's just great news, you got a very good deal. So, but if appraisal comes in lower, then we will use the lower number to calculate what percentage of the loan of that value we're giving you. So, and if appraisal comes in at 900,000, you cannot really get 900,000 loan amount because that's 100% financing unless the program allows that. But then we will see what you know, terms are going to be. Is it going to change your rate? Is it going to change your mortgage insurance and such? Or you have to come up with that difference between the price and the value, or you have to renegotiate. So that's why the appraisal contingency is very important, right? So that's basically, appraisal is a person who is a professional appraiser goes to the property and then you know, reviews, counts the number of bedrooms, looks at overall condition of the property, and then start comparing it to other compatible sales that were done in, hopefully in this immediate neighborhood in the past 3 or so months. Sometimes, you know, if there's really nothing going on in that neighborhood, they might go farther out, or they like distance wise, or maybe they go back in time a little bit more. So that's how they compare. So our house has 5 bedrooms, this house has 4, and so we have a little bit more you know, positive adjustment to extra bedroom, but this house has a deck and the house doesn't have a deck, so we're gonna subtract some of that because we don't have a deck. So that's how they compare and match, and then they come up with the value.
Yes.
So you're saying it's not as simple as, hey, my neighbor's house sold for 2 million, so mine's worth 2 million, just because I live next door. It's not that
I
simple.
wish it would be like that.
But wait a minute, we have the same floor plan, and my kitchen is prettier.
That's right. That's right. I have the most beautiful house. Anyway, okay, tangent. Okay, so that and when we shot our video, I think probably 2 weeks ago, and we talked about the you know, when are you actually committed to the lender? One of the things that we talked about was you have to work in the timing of the appraisal, because that appraisal is very critical to the process, and that's something that you guys don't necessarily have control over, because you order it and the appraiser goes out when he can. And so we had a situation came up just this past week where we had a borrower, a client. You were competing with another lender, and you actually won the client's business. And the lender, this was a VA loan, the other lender had already ordered the appraisal. So there was a timeline issue with getting that case number. We had a hard time getting that case number information, getting it transferred to you. Then we had a weekend come into play. So we ended up losing, what, 4 or 5 days in that appraisal time frame just to get the appraisal ordered.
Yeah.
And you know, I think we're still going to meet settlement, but explain on your end, like what you were trying to figure out and how that works as far as the timing is concerned.
Yeah, so this particular case, it's not the same as conventional. It's FHA, it's VA loan, so it's the process is a little bit different. On conventional, there is a, you know, you can push them a little bit more as of, you know, do it faster, right? Or you can pay extra fee to get it rushed. And, you know, every lender has a pool of appraisers that they work with. They're not their employees, but, you know, the independent contractors, but you approve them. Okay, this seems like, you know, experienced appraiser, good reviews, we will use that appraiser. So it's a pool of appraisers, and you can choose and pick who you want to work with. But on VA, those are VA assigned appraisers. They're a completely different entity. There is really no such thing as a rush with them, and it's you basically at the mercy of that appraiser. Is he busy or she, or they're slammed, and are they gonna take their sweet time, or they will work with you and get everything done fast? So in this particular situation, because another lender already ordered the appraisal, once it gets ordered, there is a case number, VA case number that gets assigned, and even if they cancel that order, that case number gets stuck uh, with actually
The
with
property.
client,
Yeah.
and we would have to get that case number transferred to us. So we had a little bit hard time getting that done because of
Multiple reasons.
because of some circumstances
Yes.
of the whole thing. So, but
Okay,
yeah,
cut to commercial where we say, this is like a public announcement where we say, hey, boys and girls, everybody needs to play nice in the sandbox. And now
Okay,
back to
back to
our
the
regularly
one.
scheduled program.
yeah. So,
You-
and once we got that done, the actual appraisal request was canceled at that time, so we had to reopen that. That's why we lost about 4 business days. But now we're back on track. We're begging the appraiser to get it done as soon as possible.
Yeah.
Of course, holidays are not helping, but we're really hopeful that it's gonna get all done on
Yeah.
time. But in the
Well-
meantime, the client's financial part is being handled and set, so
Yeah.
all
Yeah,
we
you got her through underwriting. You guys were amazing.
Like in 4 or 5
sorry.
days, it was crazy. Yeah.
Yeah.
And something to consider is in this specific situation to show how little control everybody had over the process of the appraisal in a VA situation. The other lender had ordered the appraisal and the appraiser was going out the next day. He was on the books for the next day. When that got canceled, and then you were able to get the case number, it would make sense that he'd be able to go out the next day. But no, it was like
Keep
4
that
or 5
appointment.
days before he could actually get on there because apparently his schedule filled up. So these are things that are out of everybody's control. So buyers have to really keep all this stuff in mind when they're deciding they want to shop for something. They need to really keep these timelines in mind and understand there are variables that nobody controls.
Yeah, that not being locked in with a specific lender doesn't always mean you can still meet the deadlines of the contract if you push it too far.
Exactly.
Yeah.
Yep.
But in my case right here, I think it's what works for her to do the switch, because it just depends on significance of the terms, right? How much you're saving. If it's $100, even if it's $1,000, probably not worth doing that. But when there is thousands of dollars savings, you just evaluate and
I think for her, this one was worth it.
And we were all on board. She was in the timeline of what we had laid out.
Yeah.
We're just giving an example of how that can get spread out. We're going to be fine on this transaction, but we just want everybody to understand those variables.
And I know one thing. I know that if Tatiana was the one who lost, who had already ordered the appraisal, I know you would have known where to find that case number and that you would have provided it with a swiftness, because that's the kind of awesome woman you are. That's what I know.
Back to public service announcement. Play nice.
No, I'm just giving a testimony
That is
to
true.
Tatiana.
That is true. Tatiana is great. Okay, so yeah, so that's what I wanted to kind of go into the appraisal situation and kind of reiterate. And if I could figure out how to do it, I'll link that other video to this one so that we can go in through all that. So.
Good.
Okay, do we have anything else before we break for Thanksgiving? Hey, let's so next week we're going to be in Florida. I'm still going to do our market snapshot, which is a really short video on the market statistics. Are you available to jump on a quick Zoom?
Well, we're driving on Friday.
Oh goodness, I'll do
We're
it from
going to
the
be
car.
driving and we'll have the kids in the
No
car.
mortgage minute next week, so
yeah,
we'll
let's
see
take a
you the week
break
after Thanksgiving.
Okay.
Yes.
Okay.
Have a really good Thanksgiving.
You
I
too.
hope you guys enjoy it.
Thank you. You too, guys. Have
All
fun.
right.
Go to St. Augustine and scream Merry Christmas.
Yes. We'll take selfies
There you
and
go.
send them to you. And let's not forget the paintball.
Yeah,
Yes.
I know. Yeah.
Yeah.
Okay.
I
We
already
should do a
spoke to
client
my
event.
son.
We should invite all of our clients to come and join us on that day and just start shooting the heck out of it. It'll be a great time.
Not clients, our compadres,
Yeah,
like
yeah.
all the agents. That'd be so funny.
That
Yeah,
actually
that-
could be not a bad client appreciation event.
That could be fun.
I
Yeah,
think it would be a lot of
yeah,
fun.
yeah.
You know, and we could all go out and like have a couple drinks after or before or both.
During, have a straw going up under our mask.
Before is very important, actually.
Yeah,
Yes,
before.
yes.
It'll
Perform
hurt
better.
less.
We'll hit that too. All right. Have a great Thanksgiving. Thank you
You
for
too, guys.
everything. And I know we're very thankful for you. So,
Yes, we are.
so we will see you in 2 weeks.
I'll see you soon, and I'm very thankful for you guys too. I love you.
Awesome.
Bye.